It's time now for Futures in Focus, Vonnie. Oil slightly up as the IEA says supply losses will keep prices elevated even as it's lowering its demand projections going forward from here into next year as well. Scott Gecas of Longleaf Trading joins us now from the CME. The IEA says, look, demand falls but prices rise. Do you agree with that?
Yeah, of course. Yeah, if demand falls, prices are going to be a little bit on the even side to the upside. The interesting about all the OPEC news and everything that's been coming out of the OPEC countries is the IEA came out and said that we are already adequately supplied. So with them coming out and saying it's adequately supplied, all that's going to do is just take volatility out of the market. So unless if something happens, if we go to some type of tensions increase or another sanction comes into play, that statement right there is going to deflate volatility across the board. So we're going to see how that actually plays out versus what is actually coming out in the headlines. So the stockpiles did decrease by about 5.8 million. So we're going to see where this is all going to go.
Scott, the dollar's gone down this week. What does that do to positioning down there?
Yeah, with the dollar coming down, it's increasing pretty much it's having a huge effect across all the commodities across the board, anywhere between grains to the metals to even some of the oil. So we're going to see how that's going to play out. The biggest thing with the U.S. dollar that sparks my attention is yesterday with the move in gold. Gold spiked extremely high. It was up about $34. Going into that move before for the last few days, you got to remember that the short interest in all the metals across the board, gold, silver, as well as copper, it's been the largest short interest since 2001. So that flight to quality, flight to safety, that hasn't showed up since early May. So with yesterday, with the dollar dropping a little bit off and a big spike in gold, it was just a big position reversal. You've seen all those shorts, they had to liquidate their short contracts. It was more or less a short squeeze, a big spike in the price. You're seeing it come off a little bit right now, but really not that much as what you would expect.